What's up, bro? Welcome to Prime FX. I welcome you to this channel where we share great strategies, great trading strategies for boom and crash and other indices too. So today I want to talk about a very great strategy for trading this boom and crash. Okay, I got to understand this strategy early, so I make money with this strategy. So I want to share the strategy with you. This is the supply and demand strategy. So all you need to do now is go to the subscribe button, click that subscribe button, like this video and share it with your friends so that they can also benefit from this strategy. Okay, so don't be stingy, share it with your friends. Okay, let's jump into it. So this is the supply and demand strategy. Okay, this is the supply and demand strategy. So first of all, you need to understand what supply and demand is. Okay, a supply, we have a supply zone. A supply zone is an area where we get an aggressive selling. Okay, let's say price was moving up like this, making higher highs and higher lows. Then at a point you got a very long sell, okay, that is a supply zone. Here now is a supply zone. Okay, that place is a supply zone now. So the opposite for a demand zone. So a demand zone is when we are having some sales, we are having lower highs and lower lows. Then at a point, the market move up. Don't mind my drawing. I hope you understand. The market moves up aggressively. So we have a very great demand zone here. Okay, don't mind my drawing, please. I don't know how to draw. So that is basically it. Very simple. Supply zone is an area where we got an aggressive selling. The demand zone is an area where we got an aggressive buying. Okay, so let's jump into that. Let me show you some good example here in the chart. Okay, so I have a very fine one here. Okay, I have a very fine one here. Don't mind this, please. So my battery is getting low. Okay, so now we are in this great consolidation on. No, this is a past. This is not the current price. I'm just showing you from the past what happened and how you can picture this in your chart. So we had this form of consolidation. Price wasn't moving. Okay, so at the point we got this aggressive buying here. We got this aggressive buy. As you can see, price moved up drastically, making very good green candles. Let me zoom. Okay, look at it. Very giant green candles going up. So you should mark this place out as your as your demand zone. Okay, this place is now your demand zone. We have your demand zone here. Okay, so what you do is mark out the last bearish candle. Here is the last bearish candle that led to that aggressive buying. That last bearish candle, mark it out. Mark out the highs, the high and the low. Okay, so I'll use my horizontal line, mark it out. As you can see, this is the last. That candle looks like a doji. The last candlestick, the last bearish candlestick that led to that aggressive buying. You mark it out. All you need to do is wait for price to get to that point again. Okay, just be patient. Be patient enough to wait for price to get to that point again. As you can see, after price went up, after after price went to this level here, it came back. It came back to that supply zone. Now what happened? It moved up again. Just look at it. Just look at it. Price moved up again. So what do you do? But you don't just buy when you see price at the supply zone. Okay, don't make that mistake, please. You don't just buy when price is at the supply zone. Okay, so what you do is very simple. When price gets to this level, you wait for a candlestick, a reversal candlestick pattern. Please, very important. A reversal candlestick pattern, maybe a doji, a pin bar, or long wick candle like this one, this long wick candle here. When you see this long wick candle, you wait for a bullish momentum candle to show you that yes, true, price is going to move up. That means this supply zone here, this demand zone here is very valid. Okay, this is a demand zone. Okay, a demand zone. So that means this demand zone here is very, very valid and you should place a buy. So when you got this long wick candle and you got the second candle was a doji. When you got these two candles, you should place your buy. Very simple. After the formation of this doji, place your buy, then place your stop loss below that candlestick, or you can place your stop loss below the supply zone. Okay, as for me, I place my stop loss below the supply zone. You might say the stop loss is too much, but you have to give this 100 and just let's say 115 pips. You can use a very low lot size, and you place a stop loss there. Then your take profit should be at that key level that price reversed from here. Remember what I say in my past videos, you can go and watch them. I trade from key level to key level because price doesn't move anyhow. Place your TP here at this key level. This is about 300, almost 400 pips. Okay, just let's say you take 300 pips from this market. Okay, that's 1:3 risk to reward ratio, and that is very, very beautiful. Okay, so this is how you trade with supply. Okay, and remember this, let's keep it simple. When you are trading supply, trade it on the boom assets. Okay, you can trade supply and demand on volatility indices, but if you know me, I trade mainly boom and crash because they give quick money. I like quick money. I know you like quick money too. So trade this oh god, this is demand zone. I keep mistaking. This is a demand zone. Okay, a demand zone, not a supply zone. We have this as our demand zone here. This is a demand zone. Okay, so you want to trade demand zones on boom, only on boom. Then supply zones, you trade them on crash. Okay, so down is the demand zone, then the up is the supply zone. Okay, this is a demand zone, this is a demand zone here. Then if you get this at the top, that's the supply zone. Okay, don't mistake it. Okay, so that is it. You place your buy and you take your profits at the next key level. Okay, this is very simple. And let me give you a bonus tip. Another thing you can use is your moving average crossover. Okay, I've done a video about the moving average crossover. You can go and watch it. It is here on my channel, the 8 and 14 exponential moving average. You can go and watch it here. The video is here on my channel. Okay, you can go and see that video, and trust me, you will learn a lot. Okay, so you go to 30 minutes time frame, like I said in my previous videos. Then when you see this crossover, look at it. When you see this crossover, it is very simple. When you see this crossover, you place your buy and you take your profit at the next key level. Very simple. Very, very simple. Okay, so let's go back to, okay, so where you spot this supply and demand is, use the higher time frame, because when you spot a supply and demand zone on higher time frame, you get more probability of winning that trade. Okay, don't just spot supply and demand in anywhere. Don't go to 30 minutes time frame or 1 hour time frame. Go to the 4 hour time frame, even the daily. When you see that on the daily time frame, man, that is a very good one. Okay, but let's use 4 hour time frame for this example. Okay, so you use 4 hour time frame and you spot this. Remember what I said, you trade demand zones on boom, on the boom assets. Okay, then you trade supply zone on the crash assets, because the boom, is always spiking. So when you get a demand zone on boom, you have a high probability of that asset, of that boom, that particular, maybe boom 1000, boom 300, or boom 500. You have a high probability of the asset spiking a lot, spiking and going up. But when you see it on crash, that means it will be dropping. It will be dropping. Okay, when you see supply on crash, okay, that's why I said you trade demand on boom, then you trade supply on crash. Okay, keep it simple. You can do the otherwise, but it is safer. Okay, to do this that I'm saying now. Trade demand on boom, then trade supply on crash. Okay, let me show you example of supply. Okay, let me show you how supply looks like. Let's go to crash 1000. Let's see if we spot any supply zone. Okay, it's loading. Now we are here on crash 1000. So look at what happened. This is a very great example of a supply zone on crash 1000. So as you can see, price, let me zoom in a little bit. Okay, price was consolidating. Price was consolidating. Let me squeeze to show you that this is a very great consolidation. As you can see, we don't have any clean higher highs or higher low. This is a very good consolidation. So price was consolidating. Then we had this this selling here. We had this sell here. Very it moved very fast, as you can see. You had these green red giant candles coming down. So this is a supply zone. You mark it out. This is a supply zone. You mark the last, remember, the last bullish candle that led to that sell. Okay, is the last bullish candle that led to that great sell. Okay, you mark out the high and the low. Then you wait for price to get to that level again. Okay, so as you can see, price got to this level again, and what happened? It sold off drastically. Okay, so remember what I said? You don't just sell when you see price get to a supply zone. You don't just sell. Please don't do that. You wait for a candlestick reversal pattern, a reversal candlestick pattern. Okay, you wait for a reversal if you know about candlesticks, you will know that this is a doji. This is a doji here. So when you spot this doji here, that is a doji. Okay, when you spot that doji, you could have made your entry. But if you need more confluence, you go to the 30 minutes time frame and wait for the moving average crossover. Like I said, go and watch the can I find this place now? Go and watch the moving average crossover video that I have here on my channel. It will help you a lot. Let me identify this, please. Okay, we had that here. Okay, let me put in a line there so that I can easily spot it. Okay, so let's go to the 30 minutes time frame. Let's go to okay. Oh God. As you can see, this is the 30 minutes time frame, and this is that vertical line I just put there. So when you saw this moving average crossover, after you have spotted the doji candlestick on 4-hour time frame, remember you have to wait for that candlestick formation on 4-hour time frame, and you see this moving average crossover. This is your second confluence. Okay, you see this moving average crossover. You see the red moving average on top of the green moving average. That means we are selling. Okay, when you see that, you enter for your sell. Okay, you enter for the sell. Place your stop loss. Place your stop loss above the supply zone. Okay, you place your stop loss above this supply zone, above, so that you will not get stopped out. Okay, so if you place a stop loss there, then your take profit should be the next key level. Okay, your take profit should be the next key level. Let's go to 4-hour time frame to see the next key level. Okay, we had this kind of support here. We had this kind of support here. So that's where you should take your profit. As you can see, this is a very great risk to reward ratio. Let's say you entered here, the stop loss should be, let's say, 60 pips, and your take profit should be, look at it, this is 190 pips. Let's say you take profit 190 pips. Okay, that's a very good risk to reward ratio trade. Okay, so this is basically simple. The mistake people make is they try to scalp boom and crash. They try to, catch the spikes, catch the little moves. I've said it and I'll say it again. It is very dangerous to scalp boom and crash. Very dangerous. So you can use this strategy. It is very simple, and you'll make a lot of money for yourself. Okay. So thank you for staying. Don't forget to subscribe. Don't forget to like the video. Don't forget to share. I'll be dropping more contents like this. I'll be dropping more strategies on how to trade boom and crash. If you haven't watched the videos in my channel here, you go and watch them. They will help you a lot. You will learn a lot about boom and crash. Boom and crash is very simple to trade. You just need to follow the rules. Okay, sorry for this. Just need to follow the rules. All right, so thank you for watching. See you in the next video. Take care.